Hey guys, how's everybody doing? Appreciate you tuning in this morning. All right, this is the Daily YieldMax'er, the buffer report. Maybe I should just start calling this the buffer report, or just keep calling it the buffer report. But anyway, let's. Lately, I've been obsessed with ALTI and LFGY and GPTY, but also YMAX and also all of them. So I had a show on this morning, but it was about option trading. I'm sorry if you watched that and were expecting this. But I don't know if anyone's really expecting this. But anyway, all right. So let's get down to business. Let me try to stop jacking around. All right, here's the ALTI grid. Now check this out. ALTI is actually unchanged on the day. I'll move this to its own sheet. And I looked it up to confirm that was true, and that's what they're saying. So AMD is getting murdered, of course. Gosh darn it. And I have AMDY. Man, that stock has not worked out well. Anyway, but the good news is Coherent is doing well. Nvidia, Soxel. I mean, there's other stocks that are tons of them that are doing well. So that's ALTI. So let's look at LFGY. Now, ALTI, they can have a different portfolio every day in theory. But they don't usually, but they usually have one or two new people. LFGY and GPTY, it looks like the portfolios are fairly fixed. Maybe they'll reconstitute them every month or every quarter. I ought to know that. I just don't remember what it said in the prospectus, but they don't change as much from day to day. So here is it says the GPTY verse, but it's the LFGY verse. Gosh, I'm going to throw every freaking one of these spreadsheets away and just start with fresh. I swear to God, I'm going to do that today. I hate these spreadsheets. Anyway, it's fine. It's not your problem. All right. LFGY, the riskiest, these stocks are hot messes. I mean, Clean Spark, Coinbase, Riot Blockchain. It has some good ones in here too. So, but LFGY to me is the more risky one. Now, LFGY itself is down about half a point, whereas the average stock in this index is actually up about half a point, but it's early. Now we'll look over here to GPTY. These are the allocations of GPTY. This is how much they have of each item in the portfolio. And that's as of the day before yesterday. I did not update it last night. I'm sorry. I just remembered that. But let's see how it's moving. Okay, so here's the GPTY. So the GPTY itself is down about 3/4 of a point. The average stock in their universe is down about 1/4 point. AMD is killing this one, as is Google, down 8%. All right. That's the same chart. Okay, so now let's go over here to the single stock or the index buffer report. Gosh darn it, the indexes are dead. I guess we should have gone to that's why no one watches this report, because I'm just not very good at giving it. I should do the same thing every day. It wouldn't be too hard. I tried to do that once. I did that for like a week. I tried to make slides and actually make a to-do list every morning and make it like an actual show, but it didn't work. Nothing works. This just, all right. Well, the market's going up. Look at this. It's on the high of the day. Look at that big green bar right there. We're on the high of the bar also. This morning we sold off and left behind a rejection tail. A number came out at 9 o'clock and the market took it well. Now we're back off to the races. Let's see kind of what we're aiming for in the SPY. First place I would expect to get resistance. We're trading 602 now, but I think when we get around 607, 610, that might be an area where sellers have been before, where sellers might try to turn this thing around. By the same token, if we start selling off, I would expect buyers to reappear in the 580s, possibly in the mid 590s. Those are places that I might look to buy the dip. All right, so now on to the individual stocks, though. AMD and Google are the worst performing stocks on my watch list, and there's AMDY down. It's good, though, that VIX is down. This is why the market's up, or the market's up, and VIX. I don't know which one's the tail and which one's the dog, but whatever. Whatever. We got this ship turned around and going the right direction again. So until the next tweet comes out, maybe we'll be all right for a couple of days. We have MicroStrategy's earnings after the bell. I mean, who knows? Who knows? All right. So the reason I wanted to look at the charts is because this isn't really fun to look at. Nothing's moving. I mean, look, the SPY's up. I mean, I can't even tell it. I'm going to say that's not statistically significant, that any moves around here are not statistically significant. Maybe outside of these couple of biggest ones. YMAG is getting murdered, as is KQQQ, but YMAG's down because AMD's down. Now, AMD's not in YMAG, but AMD's dragging Google down also. Well, Google had earnings. Maybe Google's dragging AMD down, whatever the case might be. Google is in YMAG, and that is causing it to get killed. AIPI looking good. And look at this, triple QI. But like I say, the indexes really aren't moving. So this is just kind of random noise in here today. I'm just going to declare this random noise. All right, so now let's look at the YieldMax buffer report. NVIDIA catching a lot of that upside. I mean, it's not making up for my bad pick in AMD. I have both of them, but anyway. All right, well, let's look at options. All right, MicroStrategies. There's two different ways that there's many different ways that you might want to play it. They have earnings after the bell. Here's a way to play it if you're bearish, or if you're neutral to bearish. You just don't want it to go up, MicroStrategies to go up more than 5% after the announcement. You know, and if it does, and especially if it goes up 11% or more, you're going to be down 30. You're going to lose $3,500. It's a $3,500 bet. What you're getting in return is you're getting $1,000 credit right away, and you're getting a 72% chance of profit. But if they come out and they, and this whatever, it doesn't matter if earnings are good or bad, but it depends on how it's perceived. But anyway, if the perception is good and the price takes off, this would be a loser. So you wouldn't want to do it in that circumstance. All right. But if you had, there's an option trade for everybody. If you were the opposite, you could do the same thing. You can make a bet that it's good earnings, but you could risk 2,400. But in what you get in return is you get 500 back right away, and you get a buffer. When I put this on, the buffer was like 5%. But the market's dropped since then. The market of MicroStrategy is dropping. Anyway, it's almost run out of its buffer. But that's that's a bullish way to play it. And what you're hoping that they're up 20% the next day. Just even though that doesn't happen often, that's what you're hoping in the back of your mind. But what you're really thinking is, I just hope it's not down too bad. That's what you really hope. I hope it's not down too bad. And even if they don't just blow out earnings, I get to keep the $515, and that's not bad for $2,500 risk for 2 days, or yesterday, Wednesday, Thursday, Friday. 25% in 2 days is generally a pretty good annualized rate of return. Anyway, so we'll keep an eye on those. But then I showed you a couple of other ones this week. Just to be fair, I showed you a PayPal one that's down $700. I showed you a couple that I took off for big winners. Spotify, that was a big winner, and Planeteer, big winner. So $2,200 worth of winners I've given out. But these other losers are still open because it's a possibility they could come back. But this PayPal trade is, it's probably not going to come back, but I've already lost the most amount of money I can lose. There's no reason to take it off and pay another commission. I won't even get any money back. So we're just going to leave it on for 3 days. I always use this example. Let's say, Trump tweets bad stuff at night lots of times. He'll have a crazy idea and tweet it, and it'll cause the market to go down the next day. But sometimes he tweets something that's a good idea or something that the market loves. Wonder if just by some reason he solves the war in Ukraine tonight or something, and he tweets, "Hey, just got off the phone with Zelensky and Putin. War's over." Whatever, that it can happen. I mean, and with Trump, anything's on the table pretty much. Well, if that happens, market will be up 5% tomorrow and 5% the next day. I mean, maybe, in some kind of, there's black swans that make the market go up too. People forget about those. Black swans don't just cause it to go down. So anyway, that's the reason we're going to keep this trade on. If you did it, you've already lost the most. You're already lost almost. The most you can lose is 834. You only have like $50 more to lose. You might as well hang on and just hope that Trump solves the war in Ukraine or something, or we get some good news overnight. That can happen too. Anyway, okay, so right now we're at about $2,200 worth of winners, but PayPal's down 800. And oh shoot, and I gave you Google. Here's the uber bullish Google load of dice. Okay, so they have already announced earnings, and the earnings were not great, but the price fell right to the break even. The break even's 191, and that's where it's trading. So if it closes here, this trade's just a wash. All right, I got a $241 credit. Let me show it to you this way. Here's the contract value, because you get an initial credit. So if it lands in this flat spot in the middle, these options are worth 0, meaning I just get to keep the $241 credit, okay? But you can see if it lands right here, it actually means we're underwater to $2.21, which is about $220. Hang on, that was a good example, but I'm trying to show there's a difference between the contract value. The contract value is 0 there, and that just means we get to hang on to our premium. Unfortunately, we need to get to at least 192.54 to make the contract zero. The contract value here is -2 something. Our initial credit was 2 something. So we're about a break even right here. And so if I turned on profit loss dollars again, you could see we're exactly a break even. I was just trying to show you how that works. We just went right to the edge of the buffer. Anyway, we'll leave this on and see how we do. So those are 4 trades. And then I showed a 5th one, and it was against my better judgment, but it was a bullish loaded dice and micro strategies. And this one's only for bigger accounts. This because there's a lot of, it's not too bad. It's actually fine. $2,400. It's about the same size as the other trades. It's a little bigger. But we'll see how this one comes out. I realized we just looked at this a second ago. This one almost has no buffer left over. Received a $500 initial credit. Let's roll time forward and see what we're looking at now. Yeah, see how we're underwater right now, -264 or whatever. That's just the theoretical value. But then we can go back here. There should be an easier way to look at it. We can go back here and look at the Look at the save trades right there. Yeah, down $245 right now. But their earnings are announced after the bell, so we'll see. It's just going to come down to that. Earnings announcement. Then also, I have 2 hedges on to protect those in case the market drops and causes these ones that I still have open to drop. So, and I wanted to show these to you. This is the same strategy GPTY uses. It's a buying a put spread hedge. Well, thing about this one is I put this on a few days ago and the market has moved up since I put it on. So now the market could drop like 4%, and this doesn't really hedge anything unless you get a bigger drop than 4%. But I have 2 put spreads. They work as a team. and sometimes I'll have 3. They're staggered or laddered because I have a closer one too here. Oh yeah, right there. So on this one just needs a drop of this one needs a drop of 1.7% to start making money, where the other one needed a drop of 5. So if the market drops, like, let's say it drops by tomorrow, um, 3% or something. This one's up $700, but the price is still at 505. I don't think the other one's protection kicked in. Hang on. Let's do it this way. I wish we could split the window screen and compare these better. So I'm going to bring up the other one in this window. Okay. So this put hedge needs at least a price of $498 before it makes anything. So if we get a little drop, a 3% drop down to 500, this one, well, okay, if we get a little drop down to 500, this one's worth about $894. The other one, we'll see what the other one's worth, but the other one, we have to make the time go by at the same time. So I drug I'm the worst at giving these examples. Okay. So there's the time. There's Thursday on this hedge. I wonder if these are different dates. So, oh yes, this one expires Monday. Anyway, so we need to take them both to Thursday. Okay, here we go. Thursday. Market drops to 500. This other one's only worth $199 profit because it's further away. But this one's worth $890. So together it's worth about $1,000. It's about $1,000 hedge if it drops to 500. If the selling really picks up and say it drops to 480, this one, is made about $936, but at 480, this one keeps making money. This one has now made $1,100. So you add them both together, and I'm not predicting that or whatever, but that's another way. I'm trying to come out ahead for the week, given between all the earnings, the bullish earnings trades and the bearish hedge. I'm trying to come out together between all of them. So we'll see how it works out. We still got a couple more days. Anyway, thanks for being here. Thanks for listening to my report. I appreciate you guys. And you guys have a wonderful afternoon. One other thing, I've been making a lot of option content lately. I'll make some more normal content. I'm going to do a review video. I know there's people that don't like to hear about option spreads all day long. I haven't forgot about doing review videos and normal like asset allocation videos. I like to do those as well. Stuff like where I compare retiring off Round Hill with retiring on YieldMax and that kind of stuff. So I promise there'll be more of that content out soon. Thanks for sticking with me, those of you that have. And I think a lot of you guys actually like the option stuff. So anyway, all right, have a good day.